mean, I think long-term investing is the backbone of capitalism in many ways. I think, based on the companies that they're investing in, how they allocate capital, the principles with which investors are making decisions, I think all has an outcome and an effect, in how our economy and kind of how society is shaped. I think, from our standpoint, especially, being at FCLT, you kind of get to understand that alignment is key to long-term investing. This is about asset owners and asset managers coming together, trying to find common ground. For IEX, I think the importance of long-term investing has been lost as it relates to the stock market, where prices are formed. You have a huge wealth transference over the past decade from long-term investors to short-term traders. High-speed traders are 50 to 60% of the market. And IEX, my company, was launched basically in response to that, where we are backed by long-term investors. We have designed technology to protect those investors in a high-speed trading market, and really just to create greater alignment from asset owners all the way down to the stock exchange. So it's the backbone of everything we do, is to think long-term, to think and align with people who do think long-term, and that's why it's critical. And I think society benefits from people thinking long-term, because just better decisions are made when you have a much broader goal, as opposed to how do you make a quick dollar, or what do I have to do the next quarter. Yeah, so for IEX, we're a mission-driven company. We were started off with a purpose to build fairer markets, and really to represent and protect long-term investors and their interests. One of the examples is if you're trying to protect long-term investors, at times that means trading less, protecting them from trading in adverse conditions or volatile conditions. And we've even built products and rolled out products. Our most popular product is machine learning technology that looks at very granular signals in the market and protects investors from trading during adverse conditions. So rolling this product out, our volumes dip, we make less money, but as a result, long-term, we're having a higher quality of trade on our market. So, when it's built into your mission to protect investors, I think that, we have to set that vision from the top, and then it has to filter all the way down so that people realize we're rolling out products that means we will trade less, which sounds crazy as a stock exchange. But it means in the long term, we plan on winning by building greater trust with long-term investors, by producing better results, which in the long run we believe will win. I think the key for long-term investors is voting with your feet. And it's whether it's based on the asset managers that you're picking. I know FCLT is talking about creating or enhancing the mandates with which they select managers, and that trickles down even to are these asset managers looking at market structure specific issues, venue performance, routing performance. And what we have found is that asset managers who are focused on these types of things in the market, we call it market microstructure, they tend to perform better through our analysis than ones who don't. So having that baked into the mandate actually starts to force people to think about issues, about trading performance, which in turn means that asset managers are now focused on routing and affecting decisions towards markets that do represent, the same types of long-term goals. So I think, again, it's trying to create alignment up and down, the investment chain. And so I think, again, voting with their feet, also too, voting with their voice.